So perhaps you want to do an account reconciliation. So first, what is it? An account reconciliation is a process that accountants use to compare two sets of records, making sure that the figures are correct and in agreement. The purpose is to prevent errors on their balance sheet or income statement accounts. It also checks for fraud, and it reconciles the general ledger to make sure that all of your financial statements are a faithful representation of the historical transactions that have occurred in a business. This will confirm that the transactions in an account are both accurate and complete. Now let's take a look at this video that properly outlines what a reconciliation is all about.
Reconciliation is an accounting process in which two sets of records are compared to make sure that the figures are in agreement. These sets of records are usually account balances. In simpler terms, reconciliation is a process that confirms whether the money leaving an account is the same amount that is spent. For example, Mike is a conscientious man who keeps all of his receipts and wants to ensure that his household's money is secure and going to the right places. He reconciles his checkbook and credit card accounts by pulling out his check copies and debit and credit card receipts and comparing them to his bank and credit card statements for the month. After carefully reviewing each record, Mike notices a discrepancy between a restaurant bill and an entry on his credit card statement. He was billed twice for the same dinner at a restaurant. Mike first calls up his bank to confirm that he was indeed billed twice. Then he calls the restaurant and politely asks the manager to refund the money to his card. The restaurant manager refuses, unless Mike can produce evidence to support his claim. Mike drives to the restaurant with his bill from the evening and shows it to the manager. Mike receives a full refund and one free dinner for two. Account reconciliation is also important for businesses, as it allows them to spot signs of fraud and prevent errors on their balance sheets. Businesses typically use accounting software to help them perform their reconciliations. Account reconciliations are an effective way to keep a diligent eye on everything from household budgets to the finances of publicly traded companies.
So what are the main steps in an account reconciliation process? First, you got to begin by comparing the beginning and ending account balances that you have on your financial statements and on the actual account statements that you get from either a bank institution or your internal records. Now, what does that entail? It actually entails that you use the trial balances for balance sheet accounts and that you have zeros for income accounts to make sure that only those transactions that pertain to that period are being reconciled. The next step is to actually reconcile accounts to the general ledger. Meaning you're going through all of the transactions listed on your general ledger for that period, and then you make sure that you have documentation supporting the date, the dollar amount, and the accounts involved. Let's take a look at an example. In this fictitious data set, we could reconcile all the revenue-related transactions that will hit my revenue account by looking at that account, looking at the balance before that, and this is supposed to be a zero because it's a revenue account, and it should be a zero at the end as well. And I could make sure that every single transaction that is listed on my financial statement actually corresponds to a source document that backs it up. So let's take a look at this invoice. This invoice that was generated on March 1st, 2021 with a reference number of 2001 could be referenced by actually looking at the source document here. This is an invoice for AJ Ball that bought a bunch of cookies, donuts, a bagel, some bagels, and there was a delivery charge. Again, this is $430.65 that were assessed to this client. And if we go back to our transaction list, that matches that invoice. Now we can reconcile the payment of that invoice. In this case, we're gonna have two payments for the same invoice. One of them for $258.39 and one for $172.26, and we could match it by looking at our merchant account. And indeed, we have a payment from AJ for the same invoice, 2001 on different dates for the respective amounts that match that. If I were reconciling a balance sheet account such as this right here, then I would want to make sure that I'm reversing, right, the reference. In this case, we have a balance of 0, so the balance of my financial statement should be 0 as well. And then I should be able to verify that I do have a payment for this amount, the processing fee, the transfer that is hitting the checking account, and so forth. If I was looking at the statement for the checking account, I would be able to find out when those transfers actually hit the account as revenue and when money was taken out as well. So again, we can take a look at all of these and the transfers as well from the merchant account deposits that are occurring here. 250.59, 166, 414, etc., etc. So the process would be to make sure that number one, I can identify and select with a check mark when I reconcile that I've identified that each and every one of these transactions actually occurred. So again, I have all the documentation in this case. I could look at this transaction right here, Nick Ball for $1,002. And so that happens to be, for $6,000, check number 1002. And if I take a look at all my checks, I could see that that check was paid to Nick Ball for $6,000 as well. Again, this is a tedious process. It requires that you first start with zeros or an equal balance on balance sheet accounts, and then you go through every single one of those transactions to make sure that they indeed are all complete. Once I'm done, if there's a difference, then there's a whole process to that. If I find that there's an error in my entries, then I have to create correcting entries. And basically, instead of just making an adjustment and reducing the amount, what we as accountants do is we create correcting entries that reverse the journal entries that we incorrectly created to begin with. So what does that mean? If I had posted a transaction for $1,000 and it never existed, I need to reverse it. Even if it did exist, I would post one correcting entry to reverse that one entry by swapping the accounts. And the next, I would create a new transaction for the actual transaction that should be created. Next, I would want to make sure that I prepare adjusting entries just in case there are items that need to be reconciled and they're not in there because of timing issues. It is often the case that checks that may have been written at the end of a month may have not actually been posted on the account. So what I do is I prepare temporary adjusting entries to make sure that I say this is upcoming checks that are still outstanding, and with that I can then bring back the account to the right balance. And then once those checks actually clear the bank, then I can reverse those adjusting entries that I did in the previous month to make sure that I always keep a tally of those unclear items that will bring the account back to match what I have on my financial records. Again, this is all about making sure that the bank statement is matching what I have on the system and so forth. And at the end, you just run reports to confirm that the beginning and ending balances are indeed in alignment. And that is basically the end of an account reconciliation. It can be as simple as a few transactions, but if you have a major business, then you will have to do this in a longer, it would take a longer effort to complete that. Now, before we go, you might think, wait a minute, do I need to do this manually? Well, that depends. A lot of the software companies or software packages that are out there can actually do this pretty easily, right? You just click a button and say reconcile. For that, let me give you a quick example.
Hello and welcome to this video demo of the new Reconcile experience available in QuickBooks Online. To access Reconcile, go to the gear icon at the upper right, then select Reconcile. That will launch the new Reconcile landing page. First, I will provide a quick overview of what exactly a reconciliation is and its benefits. Reconciling an account is important because it ensures that what you have in QuickBooks Online aligns with what really happened in the account. That enables you to accurately monitor the flow of money in and out of your business, and also ensures your books are accurate for when you file your taxes. This is done by comparing the statement you receive from your bank or financial institution with what's in QuickBooks Online. Today in this demo, I'm going to be reconciling a credit card account, and I also have my credit card statement out to complete this reconciliation. The first thing you want to confirm is the beginning balance matches with what you see on the statement. And then you proceed by entering in the statement ending balance off the paper statement. And today we'll be reconciling the January statement period. Then click Start Reconciling. And this is the new Reconcile page. I'll highlight a few of the enhancements. Beginning with the upper left here, we have a link to the credit card register. So with one click now you can access the accounts register. Below that, you have a filtering option that gives you a number of ways to locate hidden transactions. For example, you can search by memo, reference number, dollar amount, or you can filter this table down to a particular transaction status type, transaction type, payee, or filter the table down to a more narrow date range. At the top middle, by default, it'll show all transactions, but you also have the flexibility of filtering this table down to only show payments or only show charges, and easily toggle back and forth. With this particular credit card account, it's connected with an online banking connection. So with that, the majority of these transactions, since they were downloaded, are already ticked. Transactions that aren't ticked were manually entered, and for whatever reason we don't have a matching transaction from the bank. And at the upper right, it'll detail how we're progressing with the reconciliation. With all these transactions ticked, we have a difference of $55. Our goal is to get this down to $0. You'll notice as you untick or tick, all these totals will change. If you're getting down to the end of the reconciliation and you're having trouble getting down to a $0 difference, a number of tools to help you get to zero. First, we do provide a total for the number of charges and total number of payments, and your bank statement will provide the same. So you'll be able to compare these totals against what you see on the statement to see what you're missing. You also have an option here where you can expand this area to have more visibility on how you're getting to this $0 difference. It'll highlight the statement ending balance, the cleared balance, etc. And you can always collapse it to view more transactions. You also have a number of ways you can filter or sort this table, not only from here, but you can also sort these columns just by clicking on the column header. But as you locate transactions that need to be ticked, we're getting close to zero, and now we're down to a $0 difference, so we're done. At this point we can click on Finish Now, and that will provide a way to either view a reconciliation report or select Done. And you can always access reconciliation history from the Reconcile landing page by clicking on Reconciliation History. The next account I'm going to reconcile is also a credit card account. And you'll notice we have an alert that our beginning balance does not match the ending balance of the last statement period. We now provide the tools to help you easily and quickly locate the problem transactions to correct this beginning balance. And it's done with a reconciliation discrepancy report. So if you click on this link, that'll launch the report, and I'll highlight a few things here. It will detail the transactions that are causing the discrepancy. In this situation we have two. Our goal is to get this down to a $0 discrepancy. And in some situations, you may want to investigate what happened with these transactions. And over on the right, you have the option to view a transaction audit log. That'll launch in a new tab, and it time and date stamps the history of changes to this transaction. So you'll be able to see who made the change, when, maybe figure out why it was changed. And once you've determined how you want to proceed, you'll be able to go back to the discrepancy report. And we'll notice with this $100 transaction, it was previously reconciled, but now it's in an unreconciled state, creating a $100 discrepancy. And we've determined that this should be marked as reconciled. So if you click on the transaction, it'll expand and give you ways to modify it all from this report. And notice what happens once we remark this as reconciled. Our difference at the upper right will automatically adjust. So now we're down to a $9 discrepancy. We're getting close. For this remaining transaction, looks like the amount was changed. It's still in a reconciled status, but it was changed by a difference of $9. And with this particular transaction, we can either modify the amount within this field here, right-click on Edit. That'll open up the full transaction, and you can modify the amount here. Either way. Save and close. Since this is a reconciled transaction, we will alert you that you're modifying a reconciled transaction, and that may create a problem. In this situation, we know we're on the right track, so we can just disregard it. And now the report's gone. The alert is gone. Our beginning balance is now correct. And now we can proceed with reconciling the next statement period.
Again, there are several ways that you can complete a reconciliation depending on your client's software. QuickBooks gives you, as you saw, a pretty simple way of getting that reconciliation done by simply clicking or adding transactions as you identify those that are not matched with automatically matched by the download of your statements. When you're doing it on paper, then you just simply use check marks to get that done. And you want to make sure that you attach your report for the next period. And so that is basically what a reconciliation is all about. I'll be happy to guide you if you decide to engage in a project like this.